Welcome to Frame of Reference, informed, intelligent conversations about the issues and challenges facing everyone in today's world. In-depth interviews to help you expand and inform your frame of reference. Now here's your host, Raul Labreche.
Well, welcome everyone to another episode of Frame of Reference. I can't believe I just stumbled on Frame of Reference, the name of my own podcast. Oh my Lord. So I guess it's just because I'm nervous. Frame of Reference Profiles in Leadership has taken on a new persona recently. I started working with a company called Command Your Brand, and they have been able to bring me some really, really wonderful guests, that we can talk about topics with, a great amount of proficiency on the part of the guest. So you listeners end up getting the advantage of not only hearing me and my sparkling personality, but you also get to hear from some people that actually know what the heck they're talking about. And today's guest is someone that I'm excited to talk about because I'm getting up in my years. I'm in my 60s. And of course, one of the things I'm watching is my 401k and trying to make sure that the stock market, that I'm in the right things at this time. So, and my guest today is an expert in such things in the stock market and what he likes to call, and I would completely agree, the emotional roller coaster, which is our stock exchange. And I'm speaking of none other than Anmol Singh. Am I pronouncing that right, Anmol? Is that?
Yeah, you got it right. Yes.
I did? Okay, Anmol Singh. And Anmol, I have to tell you right from the beginning, my only awareness of the last name Singh is through Star Trek. I'm a big Star Trek fan, and there's Khan Noonien Singh. And I have to tell you, I hope you're nothing like him because he's not a good guy.
Yeah.
Especially with Benedict Cumberbatch playing it. He really put that to a new level. So, but welcome. Thank you so much for being here. I appreciate your time.
Well, thanks for having me. Looking forward to chatting with you.
Well, me too. There's I'm just going to read a little bit of Anmol's background, his biographical information. He has an excellent understanding of the difference between profit and loss, but he also knows it comes down to your understanding of how to make logical and fast decisions based on constantly changing data. That's where he comes in. He was born in Delhi, India, and grew up as a patient and persistent individual. I love that part. You right away, I'm assuming, Anmol, that your parents were patient and persistent people and taught you that? Or did you just come upon it naturally? You had a talent for that?
No, I think maybe the opposite, because I saw they weren't patient and persistent. That made me want to be patient and persistent. So sometimes, what you see growing up, you want to do the opposite of that.
Yeah. It's good that you recognize that was a good thing. That those are good qualities to imbue, because I am amazed at the number of people that do not learn how to be patient nor persistent. And if I would put those up in the top tier of the list along with honesty and integrity. So because they are the things that will get you through life. So you went to Brunel University, correct, in London,
Yes.
and became aware of your strong determination to be being something great, doing something great. And I that really resonated with me. You're a fairly young man, right? I'm going to guess later 20s, early 30s. Is that?
Yeah, 31.
Okay, 31. There you go. So you have a lot more black hair than I do right now. So that's where I'm coming from. Is I have looked your degree of dark hair when I was in my 30s too. So, but you started trading in your dorm and saved enough money to establish your own business as a successful trader. I thought that says something about what we used to call moxie in the old days. That you had that kind of determination, persistence, because it does take a lot of that to start in the stock market when you're 22. Is that correct? So
I started when I was 18.
Oh, okay. So by 22, you had enough money to be able to do the rest of the things you wanted to do. Okay. So, well, that's a pretty good litmus test of whether or not you're going to be able to become that person that can accomplish great things. But today he has a company, a team at Live Traders, and he shows people how to execute trades, how to review different scenarios, and most importantly, how to control your emotions when high stakes are on the line. So that to me is an incredible mission to have, especially the controlling your emotions, because it seems like, to me at least, the stock market, if there's one thing that a lot of traders and a lot of individuals are not good at, is controlling their emotions. because it is. I had a friend in undergraduate school years ago that was an economics major, and he was trying to teach me even at that point a little bit about the stock market. And it was I remember he pointed out very clearly the major things that drive the stock market are fear and greed. So, and once you can get that in your head so that you watch, well, is this a fear-driven scenario, or is this a greed-driven scenario? And then Warren Buffett himself, who says, he likes to buy when everyone else is terrified, and he likes to sell when everyone is, happy and being very, free and fast with their money. So, and that has certainly done a good amount of good things for Mr. Buffett, has it not? So, anyways, enough talking about me. I was making you aware before we started, Anmol, I like to start with this little thing called favorite things. One of these days, maybe you could tell me how to get enough money so I can afford to pay the copyright rates for having Julie Andrews kind of pipe in right now when we start this portion of the show, because I can't believe those royalties are cheap. So, but and I every once in a while try to sing it myself, but I try to spare people that as much as possible. So, but here we go. Some favorite things. Just going to say stuff. I'm going to usually try to kind of go off the top of my head here and come out with whatever hits me. But so feel free, just whatever comes out. Don't be afraid. Show your real self. Okay. Here we go. Favorite color.
Blue.
Good. Quick. What about? Do you have a favorite piece of clothing that you like to wear? Like some people think of it as a lucky piece of clothing, or just one that you think, I look particularly great in this. Anything like that?
Yep. Probably not a cloth, but my watch. Like I like wearing my watch.
Really?
Like yeah.
Do you have a series of watches, or just one in particular that you wear?
I have a series, but there's this one particular one which I really like. It's a Frank Muller, and that was kind of my favorite one. I find myself wearing that a lot.
Okay. I forget, there's a movie fairly recently. It's at one of the Iron Man movies or whatnot, where Tony Stark pulls out a drawer and he's got all of these, very fine watches, and he picks one out of there to wear. So, are you that person? Are you Tony Stark? And
not as close to that, but yeah, I do have a collection of watches that I like to rotate between.
I have one. It's a Fitbit. That's that's how complicated I am with watches. So, how about a favorite song?
Favorite song? Great question. There's an artist that I like, Oliver Heldens.
Okay.
Yeah, so it's more so like it's more so just like house music, instrumental, no vocals in it, but I love that.
So how do you spell her last name? Oliver Heldens?
Heldens, Heldens.
Interesting. I like instrumental music a lot too. I tend to listen to a lot of classical for that reason, and jazz. So I'm always kind of ticked off when I listen to an instrumental jazz channel and all of a sudden they have, somebody coming in and singing with it. I'm like, I wanted instrumental jazz. What are you people doing? Well, the voice is an instrument too. So how about, do you have a favorite story or favorite author?
Favorite story? You know what? Believe it or not, the childhood fable of the Tortoise and the Hare, because it's so applicable in investing in the stock market. Everybody tries to try to get there faster, but usually it ends up people who end up winning are the slow and consistent ones. So that applies, in all areas of your life as well. So I love that.
I understand there's a reason why those fables have stayed present, right? You get that more and more, that those kind of what would you call pinnacle moments, or those just defining seminal moments are really well defined in a lot of the children's fables and that. So
yeah, they've stood the test of time for sure.
Yeah, very much so. How about do you have a favorite food that you like, or a comfort food maybe?
Too much for my own comfort, like too many. Like food's one of probably the only guilty pleasures that I have right now. But if I had to pick one thing, I'd still pick Indian food, maybe because I grew up having it, but because it's got so much variety, you never get bored. So Indian food's still my favorite cuisine.
Is there like a favorite dish in that palette of foods that you really enjoy, or is there something that your mom makes or your dad that's wonderful?
So the most popular one in India is the butter chicken.
Butter chicken?
Yeah, butter chicken, really good. It's like a curry. If you have that with rice, it's perfect. Now you're making me hungry now that I talk about it.
And when you say butter, like the butter that you put into things? Okay.
Butter chicken, yeah.
Okay. So I remember I had a friend years ago that was really into curries, and there was a particular curry, I think it was Maharaja curry, and if I'm remembering that correctly, But there are, I mean, my understanding, there's a ton of different kinds of curries too, are there not?
Yeah, there's the variety in Indian food is it's off the charts. You never get bored. So much to try out.
Are there particular ones that go better in butter chicken that bring out a flavor you want to have come out in that? Or
A lot of places have like very different types, but it's not spicy. It's creamy. It's on the sweeter side, and you have that. Usually people have it with like rice mixed with rice, and it tastes really good. Might have that
there,
for dinner tonight. Now that I think about it.
oh, got you salivating there, didn't we? A little
I
bit,
know.
a little bit of Skinnerian operant conditioning there. So
Yeah.
we say curry, and all of a sudden he starts. Oh, I know. So I got it. So how about? Do you have a favorite author at all? Someone that you really enjoy their books on a regular basis?
Favorite author. Recently, some of the good books that I read are from Tim Grover, Relentless, and the other book he came out with called Winning. Those are really two good books that I like. So, but he's only published, I think, two books, and both of them are really, really good. But yeah, in terms of authors, there's all sorts of authors. Like even Carol Dweck's Mindset's really good. Three Laws of Performance by Steve Zaffron. That's a really good book as well. But yeah, favorite author, that's a hard one because they're all really, really good in their own way. Yeah.
Do you read any fiction at all? Do you, or is it really more designed to help bettering your skill set?
Yeah, all of them for me are nonfiction, either autobiographies or personal development, mindset. Yeah, not a lot of fiction. I don't remember the last time I read a fiction book, to be honest.
Yeah, I don't do a lot of fiction either. I find that you mentioned biographies. I really do enjoy biographies, especially people that I've admired. It's always so refreshing to kind of find out more of the backstory of who those people were. And sometimes it's not the authorized biographies where you really get the good information about things. It's people that knew them and saw them as they were in real life. How about, do you have a favorite piece of furniture in the house? A place that you like to?
Actually, my speaker. It looks like a furniture. The Bang & Olufsen speaker. So it looks like it's a piece of art, but it's actually a speaker. So that's kind of the favorite thing. Anytime somebody comes in, they're like, "Is that really a speaker? That looks really cool. Looks like a piece of art." And they're always surprised to find out when play music on it, and it's
I would think high fidelity, right? Pretty high quality range of. So is it a dual set of speakers, or does it have the stereophonic?
No, it's just like one big round speaker with like two wooden sticks on it for floors. I think the Bang & Olufsen, the one that they had a while ago. But yeah, it just looks perfect. Fits well.
What kind of volume are you pushing things out at? Are you a 180 watt guy, or are you more of a 32 watt with a small soothing sound?
I keep it pretty mid range. I don't do it too loud because you're in New York City. You get all sorts of people. You might get complaining all around.
Get up in your face. So.
Yeah, I try to get it as much as I can, but yeah, probably in the middle somewhere.
Okay. How about, do you have a favorite hobby, a thing that you like to do when you're not just studying the stock market, which I can imagine takes up a lot of time. So maybe hard to do a hobby.
Yeah, recently I've been into golf a lot. So I've been, practicing, taking a lot of lessons, and I really want to get good at it. So I kind of got bit by the golf bug recently. So I've just been working at it, practicing, trying to get better. And I play every day now. So right after I finish work, 6 p.m., I'll play for like an hour or so, just practice my swings. And yeah, that's my hobby for now.
So that's your, that up with Indian food would be your two like guilty pleasures, essentially.
Yeah, probably not going to go well together, but yeah.
Do you know the comedian George Carlin at all?
No, I don't.
George Carlin was a big comedian when I was growing up. He died in I want to say early 2000s, but he was always known for being kind of a radical. He particularly liked words and the way that we use words, and had wonderful lines like, what do dogs do when they're on vacation? They can't lay around. That's their job. But he used to say that his definition of golf was a perfectly good waste of a good walk. So and I was like, boy, that can't make many golfers happy when you tell them that joke, George. So But if you look him up sometime, you probably folks that are enjoy language usually enjoy George Carlin because he's not one to pull any punches either. I think he had the 7 words you can't say on television. So, and he would go through them, just through all of them, and they were not nice words, so you could understand why they weren't used on television. So, how about last question? How about, is there a memory or a thing that you can run into, just come across in your life that when you come across it, whether it's, remembering something or seeing something that kind of cues that memory, there's something that that when that happens, it brings you back to a time or a place or an event that happened that just can kind of help center you or just bring a smile to your face and kind of make you feel like, wow, yeah, I remember that. I want to have more times like that, or I want to be with that person. I want to go to that place. Anything like that in your life?
I think looking back, it's more so when I used to be in India, when I used to live in India, because I grew up there. I was there till I was like 18 years old. So on my work desk, like where my computer screen was, I would have a vision board, right up top of that. So my vision board back then, I don't know, like growing up as kids, you always love New York. You love the skyline. You just love how it looks. And at that time, I'd never been. But I still had like pictures of like New York City skyline, skyscrapers, all of that right above my computer desk, which wasn't really a work desk. It was more so for gaming back then when I was younger. But yeah, and then when I finally moved to New York City, and I got very similar condo to where I live now and what I had on my vision board. That kind of took me back when I moved here, and that's when I was like just a feeling of gratitude and feeling of grateful to be here for the opportunity that this obviously country has provided me, and yeah, the American dream is actually true. You could, it still exists. You can make it out there from wherever country you're in. So anytime I look out my window and I see like the beautiful New York view, that's what every single time it brings me back to that moment where I was just cutting out pieces of paper of New York City, putting it on my wall, and so yeah, I still have those memories.
Those kinds of things are really good anchor points too, aren't they? They just kind of center you back on the things that have been important to you since your earliest memories, kind of thing.
100%. Because when I moved to New York, my first apartment, my view was a gas station, or like the second one had a train station. So now, I mean, I see the Statue of Liberty, I see the Empire State, I see all of that now. So it 100%, it does center you but you also know where you started from. So, it keeps you humble.
That strikes me as unusual too. I mean, I'm sure you're not the only person, but that you had a vision board at 18. How did that come about, having a vision board? So most kids are thinking about, girls and, how they're going to get through high school.
Yeah.
I'm going to consumed with things that are pretty menial in comparison, or pretty pedantic, I guess. So that's admirable to me. Was that something your parents instilled in you, or you just were always that way?
No, I think I was always that way. I wasn't the most popular kid in school. I didn't really, the girl part didn't really come naturally to me. So I was always just like a very introverted online kind of kid, either playing games online or researching things online, studying online, and that's probably where it came to me, where somewhere might have read something. I said, you know what, I'm gonna do that. I might not be the person I am now, but I'll work at it and eventually I'll get there. So I always had that, growing up. Always been into. I was always the weird one, odd one out at that time, for sure.
Oh yeah, that's okay. Weird people are the ones that usually change the world. So as far as I'm concerned, I'm curious though, what kind of games do you play? My son's into gaming. When I was a kid, your age or earlier, the big game was Pong, for gosh sakes. So we were at that generation where we just started having games available. But my son is, gamer extraordinaire, and about your age. He's 28. So do you have a favorite game you like to play, or a range of games?
Yeah, I don't play as much anymore. There's a couple of games I might play here and there, like Call of Duty, just the standard shooters, just to, sometimes you're stressed out of your work, you've been working all week, you're like, all right, let me take 30 minutes out, I'll just take my mind off it. So usually it's Call of Duty, or a boxing game, or UFC, those type of stuff. And I have a couple of friends that are also really high performers. So sometimes on a Sunday, we're like, all right, 30 minutes. Let's just forget the world. Let's play it back at it again. We might even bet on it. So that's kind of a thing now for me. It's like every Sunday, as a few guys will just link up for 30 minutes or so, and we'll just kind of take our mind off work.
That's kind of my son's world. Although I think he spends more time. He works in the court system, so he finds a need for escapism kind of more often.
Yeah.
But that idea of being able to come home and kick some butt, in a virtual world, it just, some people talk about that being, oh, that's why we have so much violence. I'm like, no, actually, I think we have less violence because people are able to, channel that, really aggressive energy into something that's not hurting any other people. So are you the friends that you play with? Are they folks from back home, or are they from all over the world, or how's that?
Yeah, most of them are from people from home, but they also have moved over here. Some are living in California, some are living in Florida. I'm in New York. So that's just kind of a way for us to just, connect once a week to catch up.
Yeah, that's such a cool thing about the gaming community too, because I know my son has people he plays with that are, in Japan, and, some people in Europe that he's playing with, that some that he knew as foreign exchange students, years ago. And that to me is a wonderful thing, that you can maintain those kinds of connections and have the talking and the conversation going on, hey. So, there's a lot more of a understanding. Of course, there's trolls out there too, which he tells me about, some of these trolls that try to get in and they're just jerks. So but that's real life, right? So anywho, well, thank you. Thanks for your transparency on all that. That's fantastic. So here we go. You did a great job of putting together some different talking points. And as I alluded to in the beginning of our interview today, Anmol, your background is in the stock market. I mean, that's where you make your money today, is not only being an advisor in that, but a trainer in that. How did you get into that? How did you become a stock trader?
Yeah, so I was in my dorm room, when I was 18 in college. And at that time, in college, they ask you, okay, which society are you going to join? Which club are you going to join? And we had all sorts of clubs. We had for every single sport you could imagine, there would be a club, a soccer club, a basketball club. There was an entrepreneurship society. There was also different interests that had societies. And then, I wanted to learn in trading or investing. I was like, every guy I think at some level is fascinated with the stock market, right? You want to know how it works. You had no idea. And I looked around and there was no such thing as like an investment or trading society. So I was like, well, there's definitely some room for something here. So I asked a few other friends that were also interested. We just started reading books on this topic, or, watching CNBC for the first time, where Jim Cramer's talking about Mad Money. And we were kind of interested. We're like, you know what, we want to learn more. So we all four of us got together and said, hey, why don't we start something like a trading or investment society? So we started that, and then, it grew from like 5 members to 10 to 20 to 30 to 40. And that still exists till date, which is the great part in the university, still continuing strong. So we formed that. So we would meet up once a week and just read a book on the subject, or discuss something, or maybe discuss what we learned by watching CNBC. So that's kind of where the wheels started moving. And then in our college, in the 3rd year, there comes a time where you have to apply for internships or jobs or things of that nature. So a lot of my friends got tons of great jobs, tons of great internships. I applied everywhere, from the best companies to the worst ones. I just couldn't get in anywhere, and didn't get a call back, nothing. So that's when I was like, okay, I need to figure something out. And I was already researching trading and investing. So I said, let me try my hand at it. And that's kind of what led me into this journey that I'm still on today.
So do you find that because that sounds a bit, I mean, you had obviously a real passion for it from the beginning that carried you through those things. But do you find that, is there a kind of a standard ilk or a standard type of personality that's attracted to that? Or would you say you're kind of more on the outside, being a little different than, folks that you run into in your business all the time?
Yeah, I think most people originally come in for the desire of money, business, capitalism. That's usually where people come in. But the people who stick around or last are people who have a, statistical mindset. So it's not about the next trade. It's not about hitting home runs, and it's not about finding the next big stock. That's all speculation, right? Good trading is actually pretty boring. Just following through on a statistically tested model over and over again, and kind of being emotionally detached, where emotional detachment might not help you in your relationships, but it helps you a lot when it comes to making good decisions with trading and investing. So those are the good personality types that I've noticed that make for good investors and traders. those who stick around are people who have the long-term mindset, like we were discussing earlier, the Tortoise and the Hare, right?
Mhm.
Having that mindset of, hey, slow, consistent gains rather than looking for the next big stock, because that's all gambling.
So I've actually, because of my age, largely been much more attuned to things like that. But I, to that end, started subscribing to Market Watch and Barron's and really trying to kind of keep an eye on that. And I'm always intrigued by the experts, that come out and have their, this is what's going to happen, and I don't believe this. This is what, and I think, these experts are just so full of themselves that I wonder how they can really be an expert in anything other than ego, which is, kind of disconcerting to me because it is, money, 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 and which I understand that is an end goal, but the thinking is lacking. But one of the things that stood out recently in an article I read was the kind of a naysayer who's saying, the end is coming here, all of this big burst, this bubble, it's going to get popped here. And he talked about the problem with the algorithms, that so much of what's happening in terms of his perspective was the current jump in things and the strong market in spite of what's been being done by the Fed and the like, that those algorithms are at the end of the day driving a lot of that. And because of that, there could just as easily be a switch to the negative because the algorithms start picking up on leading factors that just drive it down without, it sounds to me like a whole lot of human intervention. Or, being able to say, no, we got to hold on this. Is that what you're finding? Or are you trying to keep away from using algorithmic kinds of methodologies and instead trying to keep the human element where you look at the statistics and say, yeah, I'm going to go this route?
Yeah, so we don't use like a software algorithm based trading, but in a way we do have our own algorithm, but it's kind of in our mind, right? So we've have a certain strategies and certain patterns and certain tactics that we know have a certain edge, just like a casino has a slight little edge on a blackjack or roulette table. Same way a trader would have a certain edge, meaning I might lose half my trades out of 10 that I take. I might lose on half of them. But as long as the half that I'm winning on are winning at least twice as much as what I'm losing on, then I need to be only right 40% of the time. I can lose 6 out of 10 trades and still end up being profitable if I just maintain the ratio of the winners being twice my losers. So that's what trading really is. It's not about winning every single time. It's not even about winning half the time. It's just about making sure your winners are, at least twice as big as your average loss, and that'll ensure you're always going to be profitable. So that's the model that we have in our mind based on certain strategies, and all we're really doing is just to do it over and over and over again, and the law of numbers will take care of itself. After a large enough sample size, it'll end up being the same thing. I win half, I lose half, but the winning half are making twice as much as the losing half, so there's impossible for me not to make money.
Well, those statistics are so critical too. I know one of the problems I have with I think our culture in general is that we don't really understand statistics. So we have people throwing out statistics that are really meaningless because of the way that they're deriving those statistical numbers are faulty from the get-go. They don't tell you things like, well, how big was your sampling size? Or, how did you determine who got questions? How did you determine even that you had the right questions, right? Those kinds of fundamental things that will determine whether or not you have statistics that are something you can bank on, or are they just, you might as well not bother because all they did was reinforce your biases. How do you determine when a statistic is big enough, strong enough for you to actually, actionize it, if you will? Is there a process you go through?
Yeah, as they say, right? 79.5% of stats are made up, just like this one. So most of the people are making up statistics. So what we do is we maintain spreadsheets of all of our trades that we've taken for the last, since I've been a trader. So we have a large enough sample size. So we've seen the up markets, we've seen the down markets, we've seen how it performs when the markets are just going up. We've seen how the markets perform during a federal rate hike. So because we've been doing it now I've been on my 13th year, then I've seen all sorts of markets. So I've seen crashes, the COVID crash, the comeback. So that sample size is more reliable. So that's kind of what we're looking for. Is the sample size needs to be a sample size that's seen all different environments. It's seen the crashes, it's seen the bull markets, it's seen the federal rate hikes, it's either lowered the rates. So that's a statistic that I can trust. So larger the sample size in the markets, the better it is, right? Because the more data you have, the better it's going to be.
How many data points are you trying to keep track of? I mean, I think that's perhaps one of the daunting things for me as I started to learn more about all of the things that affect that number beyond just Fed rate hikes, consumer price index, all the different numbers that are out there, the volatility index, all of those things that get put into that equation. Are there ones that you've in that data pool that you've been able to say, you know what, that one's not as consequential as people really make it out to be? These are the whatever, the 4, the 15, the 100 points that we watch that should be included in that data table.
Yeah, so our data points are all based upon our trades. It's not based on the rate hike or the Fed or what the company or the market's going to do. It's all about, okay, the last 500 trades that I took based on this specific pattern, right? And there's different patterns and strategies that we have. So we only look at our own trades, the entries, the exits, the stop losses, where we got out, why did we get out, the time of the day we got out at, the day of the week we traded it. So we're tracking all of that, and then that gives us all the information we need to extrapolate from it what we might expect going forward, so we can see, hey, this strategy for some reason works the best between 9:30 a.m. till 11:30 a.m. Doesn't work as much later in the day. If it's a day trading strategy, then at that point I'm going to try to focus on that first 2 hours where the strategy is proven to work. So we're only looking at statistics from our own trades.
So your trends are really personalized to your personal experience ultimately, right?
Right.
So that's fascinating, because you're basically disregarding the rest of the world and assuming that the rest of the world is only relevant to your world, right?
Yeah, because the trades that I'm taking, they're already in a way factoring in all those other things. So I need to only judge myself based on my trades, because that's the only thing I actually have control over. Right? I don't have control over what the Fed's going to do. I don't have control over what the economy is going to do. But what I do have control over is, if I execute my trades correctly, then can I maintain the ratio that it's been proven to generate over the last 5-10 years?
Sure. So. Yeah, I mean, and I'm thinking back to my statistics background. There was the Pearson's correlational coefficient, and we looked at that to be able to say, well, can I say that this event causes this, and to what degree can I say that was a causal relationship? And that, obviously, the higher that number, the more you could say, yeah, that seems to be a direct cause. So that coefficient, that correlation coefficient, must be a part of your algorithm to be able to say, well, there is a strong correlation here between the time of the day and these particular types of transactions. Is that a fair assessment?
Yeah, totally. And we have, when we maintain the spreadsheets, that spreadsheets in our report section, it calculates automatically, okay, which is the stock that you seem to be the best on, that you have the most winning trades on, which stock do you have the most losing trades on, which time of the day are you most profitable, which time of the day are you the worst. Maybe it turns out, which is the case for me, I don't know why, Tuesdays are not my best trading days, right? But Mondays and Fridays and Thursdays, somehow I always seem to do well. And it's funny how it works, but somehow the same thing holds true a week after week. So those are the data. Then we know, okay, we got to take a step back on a Tuesday, be a bit more selective going forward, and vice versa. So we have our own personal statistics based on just what we're doing. And it might also be, how much room did I give the stock? It might also turn out I do really great when I trade stocks between $100 and $200, and I don't do that great when I'm trading stocks that are $2 or $3. So then we use all the data to eliminate what we're not good at and double down on what we're good at.
So I assume you're not doing like index trading. You're really doing specific stocks that you're going after.
Yeah, I might trade indexes too, but they're basically, most of them are going to be stocks, and it's all based on which stock has the pattern. So if I see the pattern on an index like S&P 500 or NASDAQ, I'll trade that. If I see that pattern on an individual stock like Tesla, then I'll do that. So we're looking for just specific patterns and strategies, no matter which stock it might be on.
If stocks were people, you'd have an idea where you could say, well, that guy's an a-hole. I'm not trading in the a-hole right now because he's really being an a-hole. But this guy, he's really onto something because people like him a lot. So he's a nice guy. I'm going for him. So maybe we should do that. Maybe we should give the stocks names like Carl and Herman, or, Felipe. So,
yeah.
Or Anmol. Of course, one of them would have to be named Anmol, right? So how do you decide? I mean, if you're a person out there listening to this podcast and you're trying to figure out how you should get into, if you should get into the stock market. How do you decide what's right for you if you're long term or short term? Because it strikes me that short term people probably should be more aware of data points changing regularly, because they're in it for the short gains kind of thing. Whereas a long-term trader can be, like in my case, I'm kind of a bit lazy on it all, because I look and do my initial research and say, okay, well, over the long haul, how have these done? And, okay, now I'm going to make the choice. I'm going to watch them daily, just to kind of see how things are going. I don't want to be completely out of tune, but I'm not going to freak out every time they make a, 14-point dip or whatever. Is that just an emotional gut check you think people I need to make, or is it more driven by circumstances?
Yeah, I think firstly, every single person should be involved in the stock market, right? Now, the only difference is some are going to be long-term investors, some are going to be short-term traders, some are going to be long-term traders, but everybody should be involved in the stock market, because your money's not doing you any good sitting in your bank account, right? Because one of the other things is, when it's money is sitting in a bank account, it's not really just sitting there, because there's always something will come up with. Life will throw an emergency, money will find a way to leave your account. Some expense will come up, money will find a way to leave your account. So you're never really building wealth. So everybody should always be investing, because the biggest thing you need to know is that the stock market is higher than any point in the history, right? Sure, it was higher a few months ago, but then now it's come back up again. So the stock market is always higher than it was the last 10 years ago, always, every single time. So despite all these pundits predicting a crash or the economy, I mean, over the years, we've seen so many people predict it's the end of the world, it's the end of the economy, and they've predicted correctly 53 out of the last 2 crashes, So the thing is, market's always going to be higher than where it is. That's just how it works. Every 10 years is going to be higher than what it was last 10 years ago. So at an average, everybody can expect 10 to 12% on an annual basis by investing in the market. So why would you not invest in the market? So everybody should be. Now, majority of the people, they should be long-term investors and not traders, because trading, just like anything else, it's a profession, it's a business, it requires a skill set, it's a learning curve there. So not everybody's going to be able to be a trader, but everybody can be and should be an investor. Now, when you get into trading, there's a few different styles of trading. One of them is day trading, where we're getting in and out every few minutes, every few seconds, in the same day, in and out the same day. And then there's swing trading, where you're holding a stock maybe for a few weeks, maybe for a few months, right? Maybe for a few days, but you're not getting in and out the same day. That's called swing trading. And then comes investing, right? Where you're investing in the markets, investing in a stock. You're not really selling. You're just continuously adding and building your wealth. So those are the 3 styles. Now, as I said, day trading is something that requires time. You got to be in front of your computer from 9:30 in the morning till, however long you want to day trade, and at least till 12. So you have to have that time. So if you have another job or a business that's going to take up your time, you're not going to be able to do that. So that eliminates that. That leaves you with the ability to do swing trading and investing. Swing trading is something I feel everybody can do, despite your job. I have friends who are surgeons, they're doctors, they still swing trade, because it only takes a few minutes, every other week to just look at your trades and see what they're doing and monitor them. And I think swing trading is something everybody should do. But yeah, day trading is typically reserved for people who really want to do this full time as a career.
So on that swing trading, are you usually encouraging people to do individual companies, or are you doing something like Parnassus or Vanguard or those kinds of folks, where they're already making the choice of being in, very heavy in certain sectors, technology or medical or whatever? Which is better for a swing trader?
I think both. So swing trading is based on technical patterns that we're looking at on the charts. So as long as the chart pattern is present, you trade it, no matter if it's on a stock, doesn't matter if it's on an index, doesn't matter if it's on commodities like oil, gold, or silver. We're looking for the specific chart patterns. So regardless of where they're set up, we can absolutely trade them.
Okay. So do you find that, there is more AI being introduced into the market, even if it's just with the algorithmic checking of patterns that, you and I, if we had all the time in the world on a daily basis, couldn't check the data points that those algorithms check. But do you see that, is there a point where, if you're talking about PC now, then all of the things that are going on with that AI realm, will there come a point where your job will become even easier, because you can just pick a set of criteria that you would want to maintain, and then you let the computer do its thing? Is that going to happen, or is there always going to be a need for you and people like you?
I think there's always going to be the human element because the AI, somebody has to code that AI, right? So the AI has to be coded by an actual human being, number one. And number two, stock market is always dynamic, it's changing. There's always the element of risk management that the AI might not be able to do if you have to get in or get out really fast on something or some news hits, right? All the variables are now out of the window because of the news. So I think AI is never going to be able to fully take over. It can definitely make our job easier, which it has. I have certain set of software that I use that helps me manage the trade. So if I'm stepping away, I'm going to work out, I'm going to play golf, I'm not on my screen, then the software will manage that trade for me and get me in and out as I have specified it to do. So it can definitely make your job easier, but I think it's never going to take away that human element because there's so many variables in the markets, right? So many news variables can hit, risk management, money management, account management. There's so many different things. And plus, I think AI is never going to take over the human trader because as AI gets more and more popular, the cost of developing AI is cheaper and cheaper. So then everybody will develop that AI, and those variables will no longer work because everybody's using it. So I think the human element will always exist in the stock market.
Well, it strikes me too that human beings and what I know of them through my theater background and the like is we're just not going to let them. You know, we just have too much fun doing it. It defines so much of who we are that at some point we're going to say, yeah, I could probably do it. Maybe it even does better, but I want to do it, and we're going to maintain that presence. Maybe just because of that human hubris or something. So, what about how do you suggest to people that they get off of that? I love that you say it's the emotional roller coaster. I mean, I shared with you a little bit before we started recording how I look at the stock market sometimes and just get so frustrated with how stupid the market is behaving and how stupid some of the big traders are behaving because they'll have a bad situation and they do everything they can to make it worse. And, to me, it's like being married to someone and you have an argument and then in the middle of the argument, you decide to say a bunch of jerky things. Well, guess what? You're going to make it worse and harder to recover from. So what is that? And how do you get people to say, whoa, whoa, check your ego, check your fear at the door, and let's just look at the data. And that's in everything. I mean, I work in a retail environment and we are constantly fighting the deal of stop buying based on, I think this will do really well and look at the data that indicates what really does do well and what doesn't. How do you advise people to get that in check?
Yeah, I think the first thing is to always realize the market's bigger than me, the market's bigger than you, market's bigger than everybody else, right? Market was here long before I was on the earth. Market's going to be long after I leave the earth, right? So market's the bigger one. It's always going to be there. It's always right. It is what it is. So market's never wrong because if it was wrong, well, you can bet against it, right? But you won't. So the market is always right. It's way bigger than everybody else, and price is the only thing that pays. So there's people who think the market's going to go lower, people who think the market's going to go higher. The current price is the combination of what everybody else thinks. Is the collective consciousness. So I think that's number one. Realize that, hey, the market's always right. Now, it might not be right in the future. You might predict, okay, the future it might be like this, but at this moment, it is what it is. So I think that's the first step. And then number two step, as you said, is like not trading based on feel. Because our feel is not grounded in reality. It's not grounded in anything. There's no basis for that. There's no statistics to back that up. Right now, unless you're a professional trader, you've been trading for 10 years, then yeah, your feel matters, right? Because if your feel is basically different things you've learned and you've seen in your journey, and it's the combination of data that's inside, maybe you're unconscious of. But as a newer trader investor, you don't have that data in your mind. So you're just speculating right now. So I think that's one of the things is to realize that, okay, let's take the emotion out and what am I basing my decision on? And what happened when the last 100 times the same thing happened? What was the result of that? So then that's the data we're looking for. Hey, if this pattern, the last time this pattern set up on this stock, what happened the last 100 times? And then based upon that, we might make a more educated decision that it might happen again. So those are the things that we were going to look at, is the different types of data. And there is a learning curve to all of this, but it can be learned. So,
do you find yourself having to check your own ego? It strikes me that some of the traders and the experts that get consulted all the time, that what I'm always looking for is signs of a personal arrogance where they've started to believe that they're so infallible that, you're just setting yourself up for, I don't want to follow this guy's advice right now. I want to do exactly the opposite of what he's doing because, anyone that's that full of themselves, even if they have reason to, because they have a good amount of experience, that to me is always a bad sign in anyone that's making these kinds of decisions or giving this kind of advice, right? You've got that brand that you have to protect. He's right 93.6%. Oh, well, I'm right 96. Hey. That still means you're wrong some of the time. So,
right. Sort of like Jim Cramer, right? I mean, he's on the news all the time. Buy, sell. This company is horrible, like with full confidence. But there's actual websites that track every single call he's made and what the stock's done overall. And he's a losing proposition. He's wrong 90% of the time on the things he talks about on the TV.
Are you kidding me? 90% of the time. Really?
There's websites out there. It's called the Inverse Cramer, Inverse Cramer ETF. It tracks all of the calls that he's made and see how they've done over time. And he's wrong, but he's super confident. So on TV, and people think he might be right because of the confidence. But that's the thing. The people who think they have the edge on the market, they've got a one-up, they're always gonna, the market will humble you at some point or the other, right? It will always humble you at some point or the other. So nobody's bigger than the market. Just realize that all we're trying to do is take a little bit of the edge here and there in the markets, but nobody can dictate to the market what the market's going to do.
There's a saying in customer service too. It says the customer may not always be right, but the customer is always the customer. So,
right.
And it really dictates in my mind, I've taught that to people when we're trying to teach customer service skills. I'm like, just lose this garbage in your mind that says the customer is always right, because you're going to have those instances where you're going to look at it and say, you're not right, sir. And you're going to want to tell them you're a boob. You're just, I'm sorry, you don't know what the heck you're talking about. But you can't do that because of the customer. And it strikes me that the way you're talking about the stock market, it is what it is. And if we think that, we have enough hubris to say, well, I'm going to be smarter than the stock market is, that's pride is setting you up for a great fall at that point. Are there traits that you look for, like the people that work with you? Are there specific traits that you're looking for staff members, for colleagues that, you think make the difference between someone who really is adept and good at this versus people who are not?
Yeah, for trading, there's certain people, like people who've been ex-pilots or they've been ex-poker players. They make for really good traders. And the reason for that is very simple, because, pilots, they're so used to following a checklist. Doesn't matter if they've flown the plane 1,000 times. They leave their ego out of the door. They go through the checklist, no matter how many years they've been flying the plane, right? They might be a veteran at it with this. They'll go through the checklist. So that's a good habit to have in trading. We have a trading checklist. It's called a pre-trade checklist. Hey, did you check the market direction? Did you check the trend? Did you check the spread of the stock? Did you check the liquidity? Can you get in and out? Check. Follow the process recipe for a good trade. So pilots make for good ones, whereas people who are, let's say, ex-CEOs of companies, maybe they've come out to trading the markets now. They got this ego because they've been really successful in their business before. They think they had gotten one leg up over all the other people. And those are the people who end up not getting it, right? Because they have an ego. Whereas pilots, they're just so used to doing the checklist. And same for poker players, right? They know when to hold it. They know when to fold it. If it's not a good trade, take a small loss, get out. Don't let it turn into a huge loss. And that's a key difference maker. Just learning to take small losses and being okay with it. Part of the game, right? Just get used to taking a bunch of small losses and make sure your winners are bigger. So those poker players, ex-pilots, usually make for really, really good traders. Doesn't mean that other people won't. It's just that they are used to that. They have a good characteristic that others will still have to develop and work at.
Sounds like gamblers in general might be really, really successful gamblers, and maybe astronauts. Maybe you should explore the whole field of retired astronauts and see, because those guys have more checklooks than chickens have feathers. I swear to God. So how about, you had one talking point here that really, really strikes me, because I think it is something sadly lacking in a lot of our society, not to mention our politicians, which is another whole topic altogether. But you talk about becoming a person of integrity, and how to holding yourself to your word impacts all those areas of your life, including trading. I'm going to take a guess here that your dad is probably a pretty good man of integrity, because it strikes me that people don't learn that unless they learn it from an early age. And I have yet to meet someone who has a lot of integrity that didn't at least have a mom or a dad that were people of integrity. So is that a correct assessment? Am I
No, yeah,
what is it?
100%. I think
What does it look like to
100%.
you?
I think for me, integrity is, like doing what you said you're going to do, and then doing it when you said you're going to do it. And then also when you notice that there was a, break in integrity in your life where you said something and you didn't do it, then taking corrective action to ensure it doesn't happen again, rather than what most people do, which is, oh, I'm sorry. Oh, I apologize. And guess what? They do it again, right? Rather than putting things in place to ensure it doesn't happen again. And that's integrity is, sticking to your word and really paying close attention to every single thing that comes out of our mouth. Like we should really believe it or don't say it, and a lot of people I meet to say, you know what, I'm a person of integrity. I don't have a lack of integrity. Really? Like when's the last time somebody called you and he said, hey, I'm in just the middle of something. Let me call you back. And he never did. Or you ran into an old friend. You're like, hey, good to see you, buddy. We should totally catch up. And they've never made any effort to follow up with them to catch up again. Right? Those are all little things that we might not even notice, but those things create lack of integrity in your life. And then your brain starts saying, hey, if he doesn't believe in his own word, why should I? Right? So your brain goes against you, and that builds low self-esteem, and that leads to a perpetual cycle of low self-confidence, low self-esteem, and vicious cycle of you not doing things, and then you feeling bad about not doing it. So I think really paying attention to the words that come out of your mouth, you should really mean it. Yeah.
What strikes me too, that there's a level of accountability there that people don't own up to things, because if you're having I absolutely agree with you that the idea of, accepting your yes should be your yes, a no should be a no, that you make an accurate assessment and have a commitment to, yeah, I'm going to do this thing, or have a commitment to say, I would like to be able to tell you I can do that, but I just know my schedule or whatever, or I don't have the skill set to do it. Being humble enough to admit that. But then the other part of it for me is the person that has an integrity too can own their mistakes, can own their failures. So instead of saying, oh yeah, I didn't get that done, saying, no, I said I was going to do that and I didn't do it. I'm not only sorry, but I'm going to go get it done right now. Or, I let other things get in the way of that. I found with my wife, after 37 years, I'm finally learning to say, you know what, I'm going to take and put my big boy pants on and take the trouble that comes with, or the scolding, whatever, the failure, and just, grab it by the horns instead of trying to make up an excuse for why I didn't get it done. Just admit that I didn't get it done, and, what am I going to do to get it right? Right. I mean, do you find that when you interact with people on that level and say, hey, I understand, but I need you to be accountable for it. What kind of, is that a trait that's lacking, you think, in the stock market and traders, or not?
Yeah, because a lot of people, as you were saying, they try to justify why they didn't do something, right? That's always the case. They always try to justify why they didn't do it, rather than saying, okay, like I own up to it. This is how I'm going to fix it now. I'm going to take corrective action. Because results just are. They don't have to be explained. If you got the results, you don't have to explain it. They just are what they are. The only time we have to explain something is when we didn't do it, right? And that's the only time we have to come up with an excuses. So, the results don't equal no result plus a good story, right? Results just are. So I think with trading, we see that all the time, where traders will have a trading plan which tells them, okay, here's what I'm going to get out of the stock when I'm right. Here's what I'm going to get out. If I'm wrong, I'm going to take my loss. And then the stock's going down. They should be getting out, but they keep holding. Maybe it'll come back up. Maybe I'll buy more. Maybe it'll come back up. But now we're entering the territory of gambling. Maybe it'll come back up. Maybe it won't. Like, you want to live your life on maybes. That's not a predictable way of making a living, right? On maybes. So I think that's where traders come in and they mess it up, is by listening to their, I guess, emotions. And even if the stock has done exactly what they thought they would, this is where they should be getting out and taking a profit. And then greed takes over. Maybe it'll go higher. I'll just keep holding. And then it comes right back down. They miss that opportunity to get out. So I think following through a trading plan, sticking to it, is, I think, the number one characteristic that good traders need to have. And that's where integrity really comes in.
Is it, I think you even look at this, that, determining whether or not you're a short-term or a long-term trader, it's always, every advisor that I trust, the Warren Buffetts of the world, that really just take a view of, you have to be in it for the long haul. You have to be willing to just let the market do its ups and downs, and not freak out every time it does something wrong. Is that a philosophy that only people with, I guess, with enough room to absorb those losses when they have to absorb them, and enough resources to be able to then tap into and buy things when they are way down? When I've done that, I mean, it's been with indexes. I looked at small cap companies that were out there and indexes like Vanguard small cap value funds, and said, okay, well, these are things that traditionally in the 3 to 5 year plan have done this level of profit. They really suck right now. This is a great time to buy a good chunk of that. And sure enough, now small cap had been neglected for a while and has picked up. Is that the kind of thing that you should be doing, and not sitting there on it when it starts to take a dive again? Or is that the time it starts to take a dive? Okay, well, I'll buy more of it because it does have that 3 to 5 cycle that it'll ultimately will end up in a better place down the road. Which do you think makes more sense? Is it an emotional call again? Who are you? Do you freak out or do you not?
No, I think most investors shouldn't even, like, if you're an investor, if you're not a professional who does this for a living, you shouldn't even try to time the market or get out or get in or do any of that stuff, right? You should just ride it, because the stock market only can do three things. It can either go up, down, or sideways. Once you get into, come into terms with that's the only thing that can happen. They could go up or down or sideways. Then okay, if it's going down now, fine. Next one, it'll go right back up again, right? Because the only thing you need to know as an investor, stock market is always higher than it was 10 years ago. Always, every single time. So if you keep that in mind, all you got to get good at is just riding those downturns, right? And creating a strategy where you're averaging or you're adding every single month. So something that I do is let's say I trade for an income. That's what I use to pay my bills off and live off and do my thing. But then I take a percentage of my profits and I automatically put it in the stock market. Don't even look at it. Don't try to get in or get out or any of that. Just 10% of my income automatically goes in there, gets invested. So 1 month, the stock market could be down, right? And guess what'll happen if the stock market is down? That month, I'm buying a little bit more. Next month, the stock market might be going up. I'm still buying a little bit more. So I'll have an average cost basis. So I think that's kind of what we're looking at. Most investors shouldn't even be looking at timing it, period. They should just keep riding it and averaging in or out.
Is there a number that you would say to people if they're looking at things that they should be hitting for and accept as kind of the way it is? I've heard 6 to 9% is kind of a working rate, that if you look at something over a longer haul, that if you're doing 6 to 9%, you're doing pretty good. Not bad. And then there are people that say, oh, I do less than 20% on a regular basis, and that's why I'm an expert. And that always seems a little bit to me like, yeah, what years are you looking at? So, I mean, certainly the stock market can do that, but to have all of the right things at the right time to be able to do that regularly seems like, I don't know. What's your experience with that? Is a 3 to a 6 or a 6 to 9? Is that something that should be a warning indicator if you're getting below a certain number or get above a certain number?
Nothing. Historically, if you just stay invested in a long enough time frame, let's say if you have a 5-10 year time horizon, then you don't need to worry about any of those things, because you're gonna get roughly 10% average over a 10-year period, right? And that's proven all the way back since the 1700s, 1800, whatever the stock market's been in existence. So I think you just have to get good at holding on, and having a strategy where you can put in more money every month or every 2 months into the markets and not be concerned about the downswing. So I think that'll kind of be the best way to do it. And the other thing is, if you're a trader, then it's different. Traders can time in and out. Sometimes I might decide, okay, I'm going to get out. And then when the market goes down enough, typically 30-35%, it's always historically been a good spot to buy, because the market always ends up recovering. And we saw that just last year. In October, the markets dropped 35%, and now we're already back to where we came down from. So 30-35% is a good spot to say, okay, let's start buying.
Okay. Are you so you're an investor? I mean, that's your full-time job. You're consulting with other people, and you have a firm that does that. If you're a person looking for a good investor, what were the qualities you would look for to help somebody that has some, wants to get into it but just doesn't have the full time? They would like to have somebody like yourself. Are there qualities you think people should be looking at in an interview process that would be good warning indicators to you, or good hopeful indicators?
You mean looking for good investors?
Yeah, well, looking for somebody to advise you on that process. somebody that's going to actually you're going to say, I got $5,000, invest this for me, please, and do as good as you can with it.
Yeah, I will say don't trust anybody with your money, right? Nobody at all, because nobody cares about your money more than you do. And
even if they're making a huge commission on it.
Yeah, 90% of the hedge funds underperform the market. Meaning, if you just bought the stock market, you'd be better off than 90% of the hedge funds that are charging fees and commissions. So you don't need to trust anybody, or you don't need to go to anybody investor. These days, it's so easy. Right? Just open up a brokerage account. Just buy the S&P 500. Just buy the NASDAQ. Don't even try to pick individual stocks. Right? Or if you're going to pick individual stocks, then go with the well-known names: Apple, Microsoft, Google, Amazon, right? The big companies, and just automatically every single month just keep putting money in. And guess what? You are going to do better than 90% of the so-called experts out there just by doing this. So I think that's what 90% of the people should be doing. And the other 10% who want to learn and actually become good traders, then you can learn a little bit strategies to optimize your returns. But I don't believe in trusting hedge funds or any of those people.
Well, I'll confess, I did go out and buy, once I hit like 62, I went out and bought Investing for Dummies. And I can tell you that Investing for Dummies has been an invaluable resource for me. If for nothing else, it taught me some of the things to watch and explain some of the concepts so that I felt like I have a reasonable layman's understanding of stuff. So I've got a passion for this. I've identified myself as being a person that really digs this whole thing. How do you build on skills instead of just that, sense of, well, I'll just let it happen? If you realize, because I'm getting that way. I mean, I used to spend my mornings doing Bible study, and lately, for like the past 6 months, I spend my mornings reading Market Watch, and reading all the current trends that are going on, and and just finding the ones that are like, oh, this sounds like an interesting perspective. Is that a good way to build skills, or are there other things you would suggest for people to build that skill set?
Yeah, when it comes to investing and trading skills, just get good at observing what's happening in the world, which industries are doing well, which industries are not doing well, and then just reading up on it. I think basically skimming through Wall Street Journal, is a good habit just to get into if you're new, just to get into the habit. But once you got into the habit, once you've got your feet wet, so to speak, in the markets, then the best thing you can do is not listen to anybody, or just use your judgment. Right? Use your own mind and see, okay, where do I think it's going? And for investing, a few simple questions you can ask yourself is, the company that I'm investing in right now, is it going to be more relevant or less relevant in the next 5 years? Right? Then the second question you ask yourself, are more people potentially going to be using this company or less in the next 5 years? Those two simple questions can help you make good investing decisions. I mean, let's use an example. 5 years ago, let's say if I asked you the question, are more people going to be using Amazon or less in the next 5 years? Is Amazon going to be more relevant of a company or less relevant in the next 5 years? The answer was yes, you would have invested in Amazon. Same thing with Tesla. Are electric vehicles going to be more users or less users in the next 5 years? Right? Is company going to be more relevant or less relevant? Just by answering those questions, you could have invested in Tesla or Apple or any of those stocks 5, 10, 20 years ago, right? So those are the simple two questions people need to get in the habit of asking themselves, and then using your judgment just to invest in those great companies. And that'll also keep you out of speculative investments, right? Like if you're something, biotech stock, somebody gave you a tip off, but you don't know if the drug's going to work, it's not going to work. It's all gambling. We cannot answer those two questions, right? So that'll give us an indication of not to invest in that.
Okay. I mean, I remember too finding diversification is a big deal, right? And another thing that I read in stock market or Investing for Dummies was teaching about sectors and the protection that people have by investing in various sectors, whether it's consumer defensive or the technology sector. Do you do that same sort of thing? Are you looking at sectors and saying, well, small cap has been performing really poorly, this is probably a good time to invest in some small cap because it's going to come back. It always does.
Yeah, like certain sectors, definitely. Like, for example, right now, I'm pretty much most of my trades are in the commodities sector, like oil, silver, because I think the dollar is going to start to come down, and the dollar has an inverse relationship with things like silver, gold, and oil. So we would use that to say, okay, majority of my positions now are long oil, long silver, long gold, short the dollar, as opposed to stocks. And then when I see, okay, they've already they've got their moves, then I might rotate back into different stocks or sectors. But it's more, I would say, advanced analysis. So going back into a typical listener who's just getting into the markets, you don't need to worry about any of this thing. Just keep putting your money in the markets automatically. Long term, you're going to get that 10, 12%. Because guess what? If you put your money in the market, you can never underperform the market because you're going to get the market returns. So by definition, you're already doing better than 90% of the people out there that might do all these fancy things and still underperform the market. So I think for most people, it wouldn't matter. But for advanced traders, we can take a look at these correlations of the dollar, the commodities, and start making our decisions in that way.
Yeah, I think one of the best bits of advice I saw in one of the articles was don't worry about the specifics that are going on. I know it is. It's the investor. They would rather have someone that invests $100 a month than someone that invests a whole big chunk of money and then doesn't invest for a long time. That little bit by little bit, like you said, the tortoise and the hare, right? The tortoise isn't worried about the big streak to the end, and then take a rest. The tortoise is worried about just, keep going, plug along, and that ultimately wins races all the time. So Anmol, you have a book that you've written too that I want to make sure people are aware of as well, because that was Prepping for Success is available on Amazon. So if people want to know more about this philosophy, I guess, and your techniques for doing things, I'm assuming that's a good resource to look at.
Yeah, Prepping for Success, great book. Nothing to do with trading and investing though, but it's all about the right mindset that'll help you in any area of your life. And yeah, it's available on Amazon, Barnes and Nobles, Walmart, anywhere.
When there was something I saw in one of the things that you have a special gift in that a giveaway title, Ultimate Guide to Trading in 2023. How do people get that? Yeah,
so if anybody's interested in learning more about the markets or getting into the stock market, then they could go to livetradersguide.com, and then they'll be able to download a trading guide that I created that'll help answer a lot of your questions.
Okay, so livetradersguide.com. So is the Live Trader, and that's the name of your company, isn't it? Livetraders.com?
Yes, the company website is livetraders.com, and the guide you can get for free at livetradersguide.com.
Okay, excellent. Which I'm assuming is pretty packed with information about how to get yourself under control. I mean, I saw you even have a flow chart for kind of almost a decision-making tree, if you will, right?
Yes.
Okay. Yeah. So Anmol, any parting words of advice? I'd love to talk with you again sometime down the road when the market is tanking. I want to talk with you.
Yeah.
to see if you're actually doing what you say you are and keeping calm, and being like, this is just part of the deal. Or are you going, that would be a really telling sign of it.
Yes. No, for sure. I try to keep that on the inside.
Don't we all? Don't we all?
As I teach, it's like, hey, it's okay to have the emotion, just don't act on it.
There you go. Good words of advice in all aspects of living, isn't it?
Yeah.
So, I hope things are good out in New York. And like I said, I hope we talk again. I got to thank you so much for your time and your sagacious advice. It's a wonderful thing. I hope people that are listening are going to take away something and aren't so terrified of the stock market. I think that was my problem, is I thought, but absolutely right. If you just take that kind of calm, measured approach to it, it's kind of fun. Anyway,
yeah,
I would think you must have fun, right? So
yeah, I mean, think about it. It's like your money is like your soldiers, right? You have a certain amount of army. Now, by investing in the stock market, you're sending your army to go out to battle, capture more soldiers, bring them back so your army can grow. And that's what the stock market really is.
Isn't that fascinating? There's a game called Risk that does exactly that. There needs to be an electronic version of that, I think. So thanks again, Anmol, so much. My guest this week has been Anmol Singh, no relation to Khan Noonien Singh, as far as you've admitted, at least, right? But thank you so much, Anmol, for being my guest here on Frame of Reference, Profiles and Leadership. I really appreciate it.
Yeah, great chatting with you as well. Thanks for having me.
Take care. Be well.